Welcome back, investors, to Ticker Time News. I'm Adam, and I hope you had a wonderful weekend. And it looks like the stock market had a good weekend too, because it started the week off with a nice little rally after that nasty sell-off on Friday. The major indices all logged sizable gains thanks to broad buying efforts all across the market. The positive disposition, and here we go again. I forgot to turn the volume down, but that's it. It's gone. Now let's move on. The positive disposition today was thanks in part to UK. I know we continue to talk about the United Kingdom and what's happening over there and it affecting our markets here, but maybe there's an end to this coming soon. Now, one reason why this market, our market, bounced today, the SPY up 2.6%, the Qs up 3.3%, and the IWM up 3.2%, was that the UK finance minister, his name is Hunt. I believe that's correct. Hunt. Well, scrapping most of the tax measures from the prior, quote, mini budget, which led to a rally in the British bond market, which, as you know, they call them the gilt market. It's G-I-L-T, gilt. I think I'm pronouncing it right, market. But anyways, it's just like our bond market, but that's what they call it. Now, the 10-year gilt fell, or the 10-year gilt yield fell 42 basis points to 3.97%. And of course, the pound surged 1.5%. Could you imagine if our 10-year Treasury yield fell 42 basis points in a single day? The Qs would rally at least 5%, maybe even 10% or more if our bond market moved that quickly. That would be like, whoa, wow, right? Amazing. Yeah, the UK needs to sit down. They do. They are taking over all of the headlines and moving our markets right here. But one of the biggest reasons for why the UK is moving our market is because a lot of market participants, mainly analysts, are concerned about what's happening in Britain, and that could come and happen here in the States. But remember, our economy is way bigger than the British economy. So that's one big difference right there for why things may not come here as strict as they are in the UK or in Britain. So that's what has some analysts concerned, because a lot of times things that do happen over there in big terms happen over here on a much smaller scale. So that does make sense for a little bit. Now, the other tailwinds for today that helped to push stocks even higher included better than expected Q3 earnings from Bank of America. Ticker symbol is BAK. I'm sorry, BAC for Bank of America, and they were up 6.1% on the day. That was a big move for a big bank at that matter. Then Morgan Stanley and the chief strategist Mike Wilson, he came out and he's been right thus far on the bear market this year, calling it just practically like we have here. He says, or he said today, that the S&P 500 could potentially get to 4150 in a technical rally in the short term if, and these are two very big ifs. If number one, there is no earnings capitulation, meaning there's no earnings disasters just waiting around the bend to cause this market to capitulate. And number two's big if a recession can be avoided. And I don't think that the, quote, true recession is even going to show up until the beginning to middle of next year. I think 2023 is when we'll have the I'm doing air quotes here, actual recession, because technically on paper, we are in a recession. The only definition is 2 consecutive quarters of negative GDP growth. That's what we got. We have that in the bag. So we've already gone through a recession. We could still be in one. We still need the Q3 GDP number to come out. That hasn't yet. So technically we are in one. It doesn't feel like one, because one of the main parts of the recession equation is jobs. We need to have the unemployment rate, unfortunately, go higher. And it needs to be up there, like 5%, 6, 7, 8% unemployment, and have the negative GDP growth. And then it will feel more like a recession, because more people will be hurting because they'll be out of work, struggling to make it by. I know that part, it's rough. But you got to take the emotion out of it to be successful in the world of finance, because it's about numbers, not about people as much. And sometimes it's harsh. I get it. I understand it completely, but it is part of the game here that we're all trying to play to get ahead in the markets. Now, with the potential earnings capitulation, if we have negative earnings or negative earnings growth, that would send the market into a potential capitulation, because earnings have dropped so substantially. But looking at earnings thus far, at least looking at the big banks from the end of last week and so far that reported today, they seem to be holding up pretty well. The big banks, and they're reporting some potential hazards down the road, and a lot of them are pointing to 2023 as kind of like the worst of this bear market, which doesn't bode well for the stock market anytime soon. Yes, we can get a technical rally to 4150, and I marked that here on the SPX. So let me get my highlighter here. Obviously, we are, right here, right now, and the 4150 is up here. It seems like, that's a long ways away for a rally, especially, going back to the middle of August. We have barely, really only 2 times have we gotten 2 or more days in a row of green since the middle of August. So it seems so unlikely to reach that point. But if this is going to be a technical bounce, then yeah, we could get to 4150, because obviously, if we go back here to June, this is where we had all that trapped supply right here. The market kind of topped right there before a big fall. And then once we reached once we started to rally back up, it turned into resistance again. And many market participants thought, well, get ready, here comes the next fall. But we were able to keep going for a little bit. And then on the way back down, it was kind of used as support before finally breaking through. And then this early to mid-September rally almost came back up to that 4150 level to use it as potentially resistance, but it didn't make it quite that far. And then we haven't seen 4150 ever since, right? Like, it's been months now since we have been close to 4150. So yes, we could get a technical rally leading us to 4150. And just to bring this up again, the seasonality with the midterm elections, yeah, after we reach a bottom, at least historically here, after we reach this bottom, then we rally, and that rally takes us nearly to, almost to, this high right here, right? Or if we want to look, the summer rally would be, up here, that 4150 area. It would be about right here on this chart. So not quite making it to that 4150 on its rally, out of the bottom for this year. However, the end of the year, we do break that 4150 on the chart, just looking at this on a seasonality basis here. So there is a chance to get there. I don't know if it would be this time around or if it's going to come after we fall in November, and then when we turn around in November, then we can finally rally and get out of the hole a little bit, and then we get above that 4150. So just looking at the seasonality chart here and looking at the actual chart, yeah, it seems like it's a far ways away. Especially consider this. Let me open this chart up here just a little bit for you. And I want you to take a closer look at where we are currently on this chart. And there's a trend line. It started at the peak of the summer rally, okay? It caught resistance there. It did break through there, but came right back down the very next day. 3 days in a row catching resistance. And then Friday resistance, today resistance. For us to even consider going to 4150, we would have to first break this trend line. There's two things that are holding us here at resistance. Number one, I take that back. There are three things. Number one is that trend line I just showed you, okay? It was started at the peak of the summer rally, and it's been with us ever since. Number two, the 20-day moving average that currently sits at 36.84. We closed at 36.77. So 36.84 is the 20-day moving average. And the third resistance, even though it's not a technical resistance, but it is a line of note. And that is the upper end of the weekly expected move. And that sits at 36.97. So we kind of have three things converging there that will act, two of them as resistance, one of them as a way to measure risk. So right now, our risk reward for going long is inverted. It doesn't look good. Our risk is really high right now to try to go long. Our reward for trying to go long right here, right now, is really small. We actually have a bigger reward if we were to consider to go short at this moment in time. Now, me personally, sitting right on this trend line, this is not a place to act, okay? This is a place to sit on the sideline. This is one of those times to be patient, okay? Here's two scenarios, and I'm sure you know what they are as well, that could potentially happen right here. Number one is there is no breakthrough of this area right here. Maybe it gets slightly above the trend line. Maybe it taps the upper end of the weekly expected move. It taps the 20-day moving average. So it just slightly breaks above that trend line. And then it falls the very next day. Or number two path here is that there is momentum in the market. Maybe earnings are relatively decent and they help to push the market and give the market that momentum so it can move above that trend line and then continue to move above the weekly expected move, the 20-day moving average, and so forth. And that is the start of our rally to potentially 4150. Potentially. So it's very key that over the next couple of days, we watch this area right here like a hawk. Okay? Don't make any big moves right here. Now, if you want to play some earnings, that's fine, right? But when it comes to the SPY, the SPX, patience is your friend at this moment in time. You want to see how the market is going to react to this trend line, to the 20-day moving average, and to the upper end of the weekly expected move. Okay? So be patient. All right, let's keep moving on here. Clean these markers up here real quick, and we'll keep moving. I'll ignore those spammers in the chat there. All right. Now, we talked about why 4150 is a significant level on the chart. There will be a lot of resistance at that area, but we have some local factors to deal with. In the very short term, like over this week, to determine whether we can even start working our way to 4150 or not. Okay. I hope that all made sense. Now, one other thing to point out, if we did overcome these obstacles and we did over the next several weeks work our way up to 4150 with all of the resistance that would hit us there, we would still be making a lower high in the grand scheme of things, right? So let me adjust this chart real quick so we can get 2022 on the screen here. If we went to 4150, which is about right here on the chart, we still have the trend line that started at the beginning of January, acted as resistance here. I mean, key summer rally resistance. 4150 would put us at that resistance on the 31st of October. So that trend line crosses over 4150 on the 31st of October, Halloween. Isn't that something? Now, I'm not saying that we're going to have that strong of a rally that runs that high. But I do want to point that out, that if we were to have a technical rally to 4150, we only have a couple of weeks to actually make it there before that major trend line for 2022 starts to undercut 4150 and head lower. So a couple things to point out there about what the analyst said there about 4150, so you are aware of it. You got some nice sex bots in the chat. Yeah, yep, ignore them. They pop in every once in a while. Yeah, that's funny. I like it. I think there will be a pop tomorrow and maybe into Friday. Anytime there isn't any big news for a while, people forget we are in a down market. That's a great point right there, actually. Really great point. It is possible, as long as we have some momentum that can take us above that 20-day, the trend line. Those are the two resistance lines. The weekly expected move is a risk area to help determine whether we're in good risk reward territory or not for the week, and only on the week. Then yeah, we could pop. We could gap right up over that tomorrow. That would be the strongest showing right there if we could gap up above that tomorrow. But also keep in the back of your mind, we have earnings coming out. Tesla's earnings are this week, and Nvidia's earnings are this week. Those type of earnings, if they are negative, they can pull this market down, especially Tesla. Okay, so just be on the lookout. We're in earnings, and that's why there were two ifs. The first if being a earnings capitulation. It had to be avoided for us to even consider 4150. And then number two is no recession. And then we have the potential to get to 4150. So I think I just laid out there a pretty good example of what it would take to get to 4150 and what to be on the lookout for if we are going to move in that direction, right? Now, seasonality does have a rally that can occur after a pull down, but the timing on that isn't lining up right now. Seasonality chart says that typically after the midterm elections, right, as we get into the beginning of November, that's when we can see the rally kind of kick off. Like the last week of October, a rally into November, and then we kind of sell off a little bit, and then we go through December, closing out the year, still down for the year, but at least in rally mode, making up some of the losses from the year, because we would end at a negative 2% on the year. Maybe like 2.1, 2.2% negative on the year. So we got that. Okay, let's see here. I also just noticed the SPY is still ripping into the heavens in the after hours. Yeah, so Mel, you had a great point there. I'm going to go to the SPY now. We could, and it is a potential, as long as there's no negative headlines, there's no negative earnings reports, we could gap up over that trend line. And that trend line is here on the SPY as well. Let me open this up here a little bit so we can see it a little bit better. So gapping over that would be a good thing to help move towards that 4150 target. And I didn't put it here on the SPY, but that's about a 350. Hold on. Gotta fix this a little bit here. All right, chart just taking a little bit to get there. Okay, so for the SPY, it's not 350. I don't know why I thought that. I had that completely marked off. The red line that's going across here, I'm going to put a trend line there now. It's about 415. I have no idea why I thought 450. It's 415 on the SPY. So let's get that marked up here. And I'm going to go in here to make it precise. 415 on one end, 415 on the other. Okay, so that's where the SPY would be 415. Okay, so S&P 500, 4150, the SPY 415. Can it get there? The SPY, one thing that's interesting too, that the SPX isn't quite there on, is that this 20-day moving average seems to be a little bit closer for the SPY. That 20-day moving average is 367, which is pennies from where it is right now. We closed at 366, so 367. That's where the 20-day moving average is. Breaking above that, and also breaking above this trend line, this red trend line coming down here. Breaking those two resistance lines would be critical, and then we could move right above the weekly expected move But then I might say, if we did that and we moved outside, let's say we got up to this area right here, which is about 380, okay? There would be a little bit of resistance at 380 as well. So could it potentially be that maybe we get up here to 380 Wednesday of this year, and then we get some bad earnings or something on Thursday, and Thursday and Friday send us right back down, so we close the week right within the weekly expected move? That is something to consider, because that's how these weekly expected moves typically work. At least 68% of the time, they are winning, and they are landing right back within that zone on any particular Friday at the close, right? So that's what these weekly expected moves are. So the way you would play that is once the SPY ran up and it found its resistance, let's just use 380, then you would short back into the weekly expected move. So that's one way to do it, especially if there's negative headlines or negative earnings of some sort. All right, let's keep on moving. Let's see here. That seasonality chart is so solid. Yeah, it's been pretty spot on. I'm really confused on which way we will go in the short term. LOL. I'm hedging options contracts, so I'm not stuck too bad whenever it decides to make a move. Yeah, that seasonality chart, it has just been a winner all year. All year it's been a winner. You know, it called the June bottom. It called the summer rally. And remember, the summer rally didn't just take off in a straight line either, right? That summer rally went up and it bounced around for a while before finally moving up. And then from the summer rally, we sold off and we hit our September new low for the year, which it has marked on here. And then mid-October, we should have gotten a new low for the year, and we did. It was just a little bit to the front side of the midline for October when that new low hit. Now, what the seasonality chart is calling for is a small rally, right? And the timeline or the time frame of this, it can be off a week or so, maybe up to 2 weeks, okay? And maybe it doesn't get the exact peak or valley correct, but it's pretty darn close. And this thing this year has been so spot on, it's spooky. So this says we should have a sell-off with a little bounce, bear market rally happening right about now. And then we sell off into the last week of October, and then we bounce through the end of October into the beginning of November. So it's definitely something to pay attention to, only because it has been so spot on so far this year. So you just have to keep it in the back of your mind as you're planning your strategy. Just don't lose sight of where this thing has been and where it says that we are going. Okay. All right. Let's see here. I got that cleaned up. What else here? Yeah, I was going to say that we need to keep an open mind about the timing of it. Absolutely. The timing of it, while it said, the middle to end of June is when we would get that rally. I'm sorry, a low for the year. Can't see there. If we go back here just a little bit on the chart to that June low happened right in the middle of the month on the 16th. That was the closing low. The 17th, we had an intraday low. Did we happen to have a closing low that was lower on that particular day? I got to move the chart so I can see here. It almost looks like the candle is. Either way, 16th or 17th, that would have been where the first big low for the year came in at. And if you're looking here on this chart, you could say that, yeah, 16th, 17th, sure. Maybe that should have been more towards the middle of this box, while this bottom is a little bit to the end of the box. So maybe the third week of June would have been better, right? Well, okay, sure. So yeah, the timing of this can be off like a week, maybe 2 weeks at times. But it has just been so spot on, especially with these lows. The low in June, the low in September, and now the low in October. I know we've already hit a new low for the year in October, so would that count? It's possible, but there are two lows on this seasonality chart. And again, it's the red line that we're following for October. So if we're looking for two red lines for October, well, we've only got one so far, and that would be right here, that candle. Unfortunately, this candle right here occurred in September, not October. So that's our September low, undercutting the June low over here. And we have one October low so far. Now, we do have the intraday low of the year. That's significant, but it's not a closing low. And remember, you always want to count the closing candles. Those are the most important numbers. It's not the intraday number. It's the closing number that is most important. I got a question. Sure. Absolutely. Let's plot this up here. All right. Why Bitcoin not moving? Because it's being a hedge against inflation. And Bitcoin not moving is the best absolute. I don't even know what word to say. The best. This is the best situation. This is the best Bitcoin should be in. This is awesome. Bitcoin not moving is exactly what you want. Exactly what you want. You want Bitcoin to be so firm, so strong that it stays still, it doesn't move. And many people have called for Bitcoin to be a hedge against inflation, but it never seemed to work. Bitcoin always bounced around. Bitcoin fell. Bitcoin fell all of 2022 with the rest of the market. But when the rest of the market was making new lows for the year, Bitcoin held its ground. That's exactly what you want to see. Bitcoin right now is basing out. So when it goes on its next bull run, it will have a strong launching pad. So seeing Bitcoin hold firm right here, this is when you should be stacking Bitcoin, which means dollar cost averaging, buying as much Bitcoin as you would like to, or buying as much Bitcoin as you can, because it's not going to stay this low forever. And it is basing out right now. And this is exactly what you would want to see as a hedge to inflation. So hopefully that works, and you appreciate that comment, because it means that, you know, it's stable, so you can go buy Bitcoin. But if you're looking to swing or day trade Bitcoin, it's not really that time. It's not that time in Bitcoin story to do that. It's the time to buy it, hold it, and buy more and hold more. That's Bitcoin. Okay, getting to this question here. Weren't banks expected to beat earnings? Don't they make money off higher rates? If so, is the market just taking any good news and running with it? Okay, a couple parts there to your story. Number one, market participants right now are taking any good news, and making it big news, making it great news. It's what they want, okay? A lot of market participants are confused. They're not sure what to do. They're not sure which way this market's going. So when they hear good news, they think, oh, maybe this is it. So let's jump in. Because remember, selling begets more selling, buying begets more buying. The more people who are buying, the more people who FOMO in and buy more. Same thing on the way down. The more people who sell, the more people who get scared and sell, and then more sell, more sell, more sell. So the first part, yes, market participants are taking good news, turning it into great news to help further along their cause. Your second part of this right here, weren't banks expected to beat earnings? Most of the big banks, I do believe, were expected to beat earnings. What I think banks are going through is they're going through a bit of margin compression that maybe hasn't shown up completely quite yet. And the reason I say that is because banks borrow money short term. They lend money long term. So for the banks are going to be under margin compression when we have an inverted yield. And this 210 inverted yield, it has been inverted for a while now, a long time. That could be signaling that whatever recession we end up going through, it could be a long recession. Now, another thing too is with this borrowing short term and selling long term, with the inverted rates, that means it's costing the bank more money. And this is where the margin compression comes in at. It costs banks more money to borrow it than the bank can make when the bank is lending it with an inverted yield curve. So what a bank would like to see is a non-inverted yield curve where the 10-year is at a higher rate than the 2-year. So that way the bank can borrow short term on that 2-year, costing less money, and lend that money long term at a higher interest rate, making the bank more money. So margin compressions are happening at banks because of the inverted yield. Banks do not like inverted yields because they can't make the same amount of money as they could if the yield curve was not inverted. So a couple parts there. And then don't they make money off higher rates? They do. They make higher rates off of that long-term lending while they are borrowing short-term with that money. So you put $100 in the bank, okay? The bank can then lend out, what is it, 90% or so of the money you just put in the bank. So $100, they can lend out 90. They're going into the next day now. They lent out that 90. There's only 10 of your money left in the bank. Well, the very next day you go to that bank and you want to take out $100. Well, the bank says, oh no, we lent out that 90. How are we going to get that so we can give this gentleman his $100 bill? Well, the bank has that cash reserve. It's not enough to cover every single patron of that bank, but they have that reserve that if that person happens to walk in and request their money, then they have enough to give that person their money. But they're borrowing that money then on a short-term basis, and they're making their profit off of that long-term loan that they made with your money, or the Fed's money too. I mean, it can work in many different ways. The banking and financial world is can be a complicated one to understand. It can also be a complicated one to explain. Okay, so that's that. Let's see here. Let's click here. And let me just pull up that Bitcoin chart here, just so we know what we're all talking about when it comes to the Bitcoin thing. It's stuck in a channel right now. If you look in the past, the chart shows this area is sideways trading before. Hard to say where it's going. I think this week is the week for a pop. Okay. Here's the chart of Bitcoin. Okay. This is the daily chart. So each of those candles represents one day. End of last week, over the weekend, Bitcoin finally fell within my target circle that has, oops, don't want that. That's been there since the beginning of the year. I can't imagine that I would have ever been that correct. And I actually had another circle that was further back, but I'll clean this up now that it has reached that target. Anyways, with Bitcoin here, all right, hold on, one more button to clear this up. There we go. There we go. Now it's going to work for us and do what I want. Okay, when we're looking at Bitcoin long term here, it's going to take a minute. I should probably go to maybe a monthly view. That would probably be better. That's what I'm going to do. I'm going to go to a monthly view here for Bitcoin. So that way we can see a little further back, and it shouldn't take as long to do so. All right. Big messy chart there. Okay. This is going back to 2015, right? And you know, Bitcoin has that 4-year cycle. It's got its bull market. It's got its bear markets, just like the stock market. One thing that has made the most recent run in Bitcoin's cycle is all of the many investors who got involved with the 2020, 2021 big retail investor. I don't know what name to put on it quite yet, but it was definitely the time of the retail investor. Had nothing better to do at home, getting some money from the government. Why not learn to invest and trade? And they did. That's why this thing spiked so far, so hard, so fast. Now it's going through its bear market cycle, which I think is kind of coming towards an end. Okay. I really do think that the bear market for Bitcoin is nearly over. Now, when I say that, I don't mean that we're going from bear market directly to a bull market. I don't think so. I think there is a middle space. A bear market, you typically think, oh, well, the market's going to go down. Whatever the asset class is, in a bear market, you think that it's going to lose value. And then you think, oh, bull market, well, everything is going to gain value. But there is also these middle ground areas where it's not a bull market and it's not a bear market. I think that's where Bitcoin is headed. I think Bitcoin right now is heading because it's on this 4-year cycle where it has its boom and bust. It's run up and it's run down. And in between those 4-year cycles, there has to be a calming period, a period where Bitcoin remains stable, a period where Bitcoin bases out. And it builds that base, and it makes that base so strong that when it gets to the next bull market, it can literally send it on a catapult ride even higher than before. And I think that's what will happen here with Bitcoin. But 2022 now, and I'd probably say the majority of 2023, at least the first half of 2023, you will probably see that Bitcoin is doing what it's doing right now, barely moving. But then, the closer we get to the next halving event, the closer we will be to the next bull market for Bitcoin. I really think it's that simple. That's how it has worked for Bitcoin since the beginning. The only difference that you can see with this chart is the last cycle, okay, which would have been 2020, just so happened to coincide with 2020. But 2020 to 2022, it went up and it went down. Okay. Now, the next year, I think it will base out. It'll move sideways, waiting for that next bull market, waiting for the next halving event, which is in 2024. So, at some point in 2023, we might start to catch a few bids, and maybe Bitcoin, is volatile for a little bit, but maybe it's slowly making a way a little bit higher. People are starting to get more, we're getting closer to that halving event. Maybe, just maybe, we can ride this thing and go a little higher. Well, it's possible. And then we have the halving event, and then this thing, goes on up, and it goes higher than what it went before. Because Bitcoin is definitely a much more well-named brand right now than it was even in 2020. So just imagine where it's going to go next. Now, of course, this overarching larger time frame of Bitcoin does not mean that there cannot be ups and downs along the way as it bases out. I'm going to clean the chart up here. I'm going to go back to the daily view for where we are right now. And then we are going to go to the daily view and look at where we are right now. And it's about 18,500 is the base, and 20,000 is the upper limit. Okay. So you can look at 18,500 as support, 20,000 as resistance. So if you wanted to trade Bitcoin, it would be a swing trade. Buy it when it gets 1850 or below, and then sell it when it gets to 20,000 or above. It could take a couple of weeks for it to go through that right now, but that is a good strategy to use for Bitcoin because it seems like that's a very stable place that it's at right now. I don't know how many times I've looked at Bitcoin over the past couple of months, and it seems like it's 19,000 something every time I look at it. That is a good thing. This is what you want to see Bitcoin do. And for Bitcoin to get to those bigger dollar amounts, Bitcoin is going to need some big investors behind it, right? It's going to need pension funds behind it. It's going to need big investment firms behind it. In order for Bitcoin to reach those much, much bigger levels, I'm talking $100,000 of Bitcoin, $500,000 of Bitcoin, whatever your magic number is per Bitcoin, it's going to take some big investors in order for Bitcoin to get there. What do big investors need? They need two things. Number one, they need somebody that they can hold accountable. Number two, they need their legal department to check off on whatever vehicle it is that they are using to invest. So, once Bitcoin can find a base where it can hold up strong in this 18.5 to 20K, seems like that's the base right now. That could change in the future. This is good for Bitcoin. This is really good. This also shows that the institutional investors, or shows to the institutional investors and the pension funds and the larger investment groups out there, that Bitcoin can be stable, that Bitcoin can be less volatile than the NASDAQ 100. And that's kind of what it's showing right now by not moving a whole lot on a day-to-day basis. So just a little rant there about Bitcoin. I also believe in Ethereum. Honestly, it's Bitcoin and Ethereum, and that's it. I'm not worried about any other coins right now per se. All right, let's keep moving here. Bitcoin and Ether, are both in a channel range sideways trading now. Yeah, they are. They definitely, I mean, you can see it right here on the chart. Bitcoin is in that 18.5 to 20K range where all it's really doing is moving sideways, right? And for the most part, the middle of September, that's where this real tight range started. Prior to that, it was getting into that range, but it would still have its ups and down days kind of moving wildly, but not too wildly. I mean, like a 10%, yeah, 10% day. That's not wild in Bitcoin terms. 11% day up, 10% day down. Yeah. So I'm glad to see that Bitcoin is leveling out here. I think it's a good thing. I really do. Something else that Bitcoin needs in order for big institutional, think pension funds and the billions of dollars that pension funds have. In order for pension funds to really start investing in Bitcoin, is Bitcoin needs to be regulated. And I believe Bitcoin should be regulated, but that regulation should never, ever limit innovation. Innovation is key. So as long as innovation is not limited in whatever legislation or restriction, wherever it comes from, whether it's from Congress, the SEC, who knows where, as long as it doesn't prohibit innovation and it just keeps things simple and fair, those would be great, awesome for Bitcoin, for Ethereum, because then the big money could invest. I mean, if you want to ever see the market cap of Bitcoin get close to gold, which it's not even close at all, you want to see some sort of regulation that's fair for investors and for Bitcoin and for miners, and also it doesn't limitate, it doesn't prohibit innovation. All right, that's all. I went off topic there quite a bit on Bitcoin. So, all right, let me get back on topic here now. There was a little section that I wanted to talk about, but I guess I'll go through it real quick. What I wanted to talk about here for just a little bit is something that we do for our private investor community, and we send our investor community a lot of information, and that information, it's key knowledge to help our investor community become better informed to make better decisions when it comes to investing or trading. Now, among this knowledge is our top 10 stocks list. And we got growth, value, dividend, and momentum. Be on the lookout for momentum. That'll be coming out next. Now, before this live stream, we sent out our updated top 10 growth stocks list. We send it out in the afternoon. We usually update that a couple times a month because things are always changing. Now, I don't always talk about them because, again, it's for our private investor community, so it's information for them. But I wanted to share with you an up-and-coming potential growth stock to keep on your radar. It is not in our top 10 yet. It was close, but it is not in our top 10 yet, and that's Richardson Electrics. Richardson Electrics. The ticker symbol is RELL. Wait till you see this chart. Just wait till you see this chart. This is going to be spectacular. Daily view. I want to get the whole of 2022 on this chart. I'm going to have to click a quick little button here. Here we go. February, there we go. Look at that, 2022. This is a company, a stock that is not negative for 2022. So Richardson Electrics. Before I talk about them, just real quick, isn't this a nice looking chart? Yeah, had this little sell-off here, September into October, but it bounced right back up above its trend line that it had set since May of this year, and it's just up and to the right. Again, it's in the positive year to date. They're up 43% year to date, which is something that you cannot say about many companies. Now, just a real quick elevator pitch here for Richardson. They're a provider of engineering and design services, as well as power grid, microwave tubes, and related consumables. Now, I'd call it an underrated 5G play. Okay, that's how I would go about this one. Now, the company is fairly small, so that's something of note too. But it grew nicely in Q1, which was back in August, with revenue up 26% year over year to $67.6 million. Also, Richardson has now posted 9 consecutive quarters of sequential revenue growth, despite facing some challenges. That's solid. Now, those challenges, including what it calls a fluid business environment, which is a great statement for how things are changing rapidly. But unfortunately, Richardson remains challenged by the long semiconductor lead times and the supply chain problems. This affects both the component business and the engineered solutions. Its backlog does remain pretty darn strong, though. The stock has been trading nicely higher in recent months, and it popped on Q1 results a little earlier in October. With this being a small company, it could be in for a volatile ride. So you do have to be cautious about that. But I like it. I like the stock for its potential growth story when this market finally turns around. And now, talking about this, just real quick pitch there. What overlooked companies should be on our radar that could have a beautiful looking stock chart when this market finally turns around? Let me know. This is one, again, it's not in our top 10. It came close, and it's an interesting one. I like it. Now, if you would like to get instant access to our weekly expected moves, numerous trade setups, top 10 stocks and growth, value, dividend, and momentum categories, economic and market insights, and a private Discord server, all to give you an edge over this market, then click the first link in the description, because knowledge is power. Now, many stocks moved higher today, with the advanced decline line favoring advancing issues by a greater than 4-to-1 margin at the New York Stock Exchange. Gains in mega caps. Let's look at MGK, which is Mega Cap Growth ETF. Almost there. Almost there. Yeah, down for the year, but up for the day. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, it closed up 3.5%. You compare that to the 2.6% for the SPY, and Mega Cap Growth did much, much better. Now, this is the updated weekly expected move for the Mega Cap Growth ETF. You can see today, let's bring this thing up a little bit. There we go. It's sitting pretty nice. A little on the low side, but it's okay. All right, let's keep moving. Apple today. Why did Mega Cap Growth do good today? Well, Apple, AAPL. It's been a directional driver. It's always a directional driver. So I don't know why I have to say it was today or not. Just know that Apple does weigh down the SPY and the SPX. Okay. It's a directional driving stock. But Apple was up 2.9% today. And it was a key mover. Now, Morgan Stanley today named it a top pick in the event of an economic downturn. I find that interesting. An economic downturn. What does Apple provide that could secure it in an economic downturn? Well, it's got a lot of cash on hand. What about its products? It makes expensive products that have a high reputation for their quality. So is that going to work if we have an economic slowdown? I don't think so. Now, they do have a loyal customer base. We all get that. Is that enough to protect it in an economic downswing? I think not. I think it's enough to, keep it propped up for a little while longer compared to maybe some other companies. And do ignore the sex dating app thing here in the live chat. All right. Let's go look at the sectors real quick, because they are important to how the SPY moves and the SPX. And you can see top right-hand side of your screen, all of those beautiful green percentage points. All 11 S&P 500 sectors closed in the green, with consumer discretionary, ticker symbol XLY, up 4.2%, showing the biggest gain. That was that move, I should say, in consumer discretionary was bolstered by constructive comments on how would I say them, on the state of the consumer from Bank of America following its earnings report. Then consumer staples, XLP up 1.1%, energy XLE up 1.2%. Even though they were up 1.1 and 1.2%, they still brought up the rear of the leaderboard. Now, WTI crude oil, let's look at this. US oil oil. Man, OPEC Plus, they want to get this back to $100 a barrel as soon as they can. WTI crude oil futures fell 0.3% to $85.49 a barrel. It has fallen below its trend line. It is below its 50-day moving average. It is under its 5-day EMA. Those do not inspire bullishness. Breaking those levels inspires bearishness. Now, it is above that 20-day moving average, and it did use that as support today. But that 20-day moving average, it has been a spot of resistance for the 20-day and WTI crude oil futures. I mean, we could really go all the way back here to June the 17th, just right above my head here in this area, to see that purple line, how it was coming up and then curled over. It's been resistance for the majority of that time. Only recently, going right here to the 4th of October, did it finally break that 20-day moving average. Now, buyers in the equity market were not deterred when the 10-year Treasury note yield breached 4%. Let's look at that. US 10Y, that's the 10-year. It did top 4%, but the 10-year dropped to 3.91% earlier, but settled up 1 basis point to 4.02%. You can see it's down slightly in the after hours. I need to move this trend line up here a little bit. There we go, line back up. And you can see it's still running above that trend line but it has for the majority of the time here. It is above the 5-day EMA. It did connect with it today, so that's a positive. It's running right where it should. It could potentially be slowing down a bit because that does look an awful lot like a reversal candle there for WTI crude oil futures. It's a hammer candle. They typically mean reversal. So we'll see how tomorrow plays out. It is down in the after hours a little bit, like I said. All right, 2-year US 02Y for the 2-year. The 2-year yield, it was at 4.4% earlier, but it settled at 4.43%, even higher to end the day. It's still connected with its 5-day EMA, so, that's a positive. It's above that 20 by quite a bit. It's way above that 50. I'm not sure when this thing is going to slow down. Obviously, anything can happen. Now, economic data was limited to the October Empire State Manufacturing Survey, which came in at negative 9.1 versus the prior reading last month of negative 1.5. A number below zero, and now we've got 2 months of, suggest a contraction in manufacturing activity in the New York Fed region. That's not good. Not at all. Now, ahead of Tuesday's open, we get Johnson & Johnson, ticker symbol J&J, Albertisons. Remember, they got a takeover bid that could potentially come into play. So we'll hear more on that. Ticker symbol ACI. Lockheed Martin, LMT, Goldman Sachs, GS, Truist, TFC, and Hasbro. Ticker symbol HAS, the toy maker. They all headline earnings reports tomorrow, again, before the market open. Now, market participants will receive the following economic data tomorrow. 9:15 a.m. Eastern, the September industrial production. Expectation is 0.1%. The prior reading last month was negative 0.2%. Capacity utilization. Expectation is 79.9. Prior reading was 80. So just 0.1% lower on this one. Then at 10 a.m. Eastern, we get the October NAHB Housing Market Index. The expectation is a sour 44. The prior reading was a 46. Again, 50 is the key line. 50 and below, you are contracting. We know the housing market is contracting. All right, now, before I wrap up this live stream, now would be a great time to plug in your questions. I know we've been answering the questions as we go today. How did you like that? Did you prefer to answer them as we went? Or did you prefer maybe to answer them all at once at the end? Let me know which one you liked. I'll do either one. Excuse me. Just remember, this live stream is for you. Okay. I'll look over the cues. Excuse me. And the IWM real quick because I didn't look over them already, and we can talk about this here. I can give you the weekly expected moves too for these. They are updated while this chart loads. If you could both work, that's awesome. I like either way too. I don't mind, pausing and then answering the questions. It is what would I say? If I'm answering questions in between, which I like doing, sometimes I'll get lost in my thoughts and forget what I was thinking. Just have to do a better job of writing my notes down. Having trouble joining the Discord. Okay. The pinned, oh, yeah, actually, that's real easy. There is a pinned comment in the live chat. It's just tickertimenews.com/Discord. That's an invite to join the Discord. You can be on the public servers, and that's fine. For the Patreon way, I would have to look up real quick. I don't know the Patreon. There's something that you have to do with Patreon and Discord. I think you have to connect them together, but they do. I'm going to give you the link here real quick. How to connect Patreon and Discord. You log into your Patreon account and then you go from there. But this link right here, hold on one quick second. Ah, it says it expired, huh? Okay. Well, I'll have to update that. Let's do this. I thought that link was in perpetuity, meaning that it lasted forever. I could be wrong though. Okay, give this a second here to load. All right, come on, Discord. Okay, Discord is loading. While that's loading, I'll go ahead and on the cues here, I'll point out a couple of things. Number one, the weekly expected moves. On the upper end, it's 271. On the lower end, it's 250. It looks like we are headed right towards testing 271 to see if we can break above that. But just like on the SPY and the SPX, there is resistance with the 20-day moving average and the trend line. All right, I'm just getting a Discord has loaded. I might have to send it to you after live stream. Discord, I guess, takes too much. Yeah, that's what I was right here. This is what I was thinking of doing. I'll send you a message on Patreon with Discord, because Discord it's not loading right now to get to the link that I need to send. So as soon as this live stream, yeah, it just dropped. Okay. Remember, I'm running on a Chromebook, not a real computer, as some would say, right? All right, I'll send it as soon as the live stream is over. I'll send you that link on Patreon. I'll make a public post on Patreon. That way everybody can get access to it. And I'll send you a note too with that link as soon as the live stream's over. No worries, can totally do that. And I'll have to look to see how those links work as well. I thought they lasted more than once. You would think for the server, since for the person who set the server up, you would think that that code would last for forever, so I'll look into that too. All right, so weekly expected moves. We've got the trend lines there that we have to watch out about. IWM, nearly the same tune here. Everything seems to be running into a trend line or something. But you can see here, IWM, completely different. IWM broke that trend line last week. IWM broke its 20-day moving average last week. Now it is moving along an inclining 5-day EMA. It is still under the upper end of the weekly expected move, which is 173. Looks like it's going to test that at any time. Now, did I do it on the Qs or IWM? I'll tell you in just a moment. I did a trend line. Oh, I did it on IWM today. Look at what IWM did today. This is bullish here at the close. A symmetrical triangle. This is the 5-minute chart, okay? 5-minute chart for IWM. Symmetrical triangle. Then at the end of the day, it finally broke loose. And now this is looking to be pretty bullish for small caps. Okay? Small caps. Symmetrical triangle. Broke out. Moved higher. Pulled back. But it did not pull back under the low of the previous candle. So this is bullish, I think, for tomorrow. Now, it did create a pretty big gap up here this morning, as did most. Now, let's point this out too. You can see the purple line. That's the upper end of the weekly expected move. That's kind of like the next target, all right? If we're looking back here at the past couple of sessions, we have this high right here, okay? And that's right about, there's this blue line that comes across right here. It just broke that, barely, before it started selling off into the close. So this is an interesting line right here. And if we go to the volume shelf profile, you'll see that's kind of like the edge before it falls off, right? So we've got this big volume spike here, and then it just drops off once you get above about 172, 172.39. You get above that, you can go a lot higher, because there won't be too much resistance in your way. I mean, you can see that clearly here with the volume shelf profile. Even as I took it out, there's this line right here where like volume completely drops off. And you really only got some bidders in there. There's not a lot of sellers. So do keep your eye on that. Again, 172.3 for tomorrow morning. If it can break above that, that'll be a very bullish thing. So this is a bullish development here for the IWM, small caps. All right. Well, that's everything. Yeah, Discord, I don't think you show up in search unless you pay for Nitro. I think it's what it's called. Trying to do things on a shoestring budget and not try to incur too many cost at this time. Obviously, that will change. The more we grow, the more we get the name out there, and we can do certain things like Nitro on Discord. Another benefit of Nitro, and this is a problem, my Saturday, the Saturday note that goes out, it's typically a longer note, right? And it typically has a chart or two in it. The only way to post it on Discord is either to pay to have the Nitro service, and then you can post longer posts, or B, I have to post things and break them up, 2,000 characters for each post. I guess that's going to be my solution to posting that specific note on Discord on Saturdays, is to break it up into smaller batches, and instead of having this one long story, it'll have to be broken up into like 5, 6, 7 different sections on Discord. So I know someone asked that question. I'm just letting you know. I'll make sure it's on Discord. The other option is to upload it as a PDF onto Discord. But I would imagine if you're using Discord, it's because you would rather read things and interact and do things on Discord, and not have to download a PDF to use it. So I'll post it on Discord, however many different posts it takes to get it up there. But it is typically, Saturday post is typically bird's eye view, way more in depth than normal. So Mel on Patreon, go to. Yeah, I'll send her a link here once we get off for Discord. No worries. All right, well, that's everything that I wanted to touch on today. If you guys are good, I'm good. We'll wrap it up here, and we'll be back tomorrow after the market has closed to talk about what happened, why it happened, and what to expect. Now, I do want to just make sure. Oh, yeah, that's exactly how you do it. Settings, more, connect apps. Cool. And I'll make sure that Discord link is resolved too, whatever the case may be. Thank you for posting that. I appreciate it. Okay, well, that'll be it then. Thank you, ladies and gentlemen, for joining me today. I greatly appreciate it. Make sure to click that like button, share this video with a friend. Those two things greatly help out the channel. And of course, if you want instant access to our weekly expected moves, our trade setups, our stock market scans, all kinds of valuable information, because knowledge is key to beating this crazy market, click the first link in the description. I think you'll enjoy it. So take care, have a good one, and I'll see you in the next video. Take care.